Okay, so then moving to the next candlestick pattern, which is spinning top or doji. Okay, so the spinning top looks like this. The characteristics of this candlestick is that it has a very small body and it has both the upper and lower shadow. So and also, you know, you need to look for the prior trend. So and the doji, here the body of the candle is very negligible. It can be very small or it can be negligible at all. What it means is the open price and the close price are same. Okay, so what does it mean? So what is the psychology, behind this particular pattern? Okay, so what happens, this represents actually indecision. Indecision means that neither the bulls win nor the bears win. So here the price opens up, it tries to go down, but suddenly the buyers comes in, and also buyers comes in, the price going up, but suddenly the sellers comes in, selling pressure comes in, and the price settles almost as same as the opening price. So neither the bulls win nor the bears win. So this represents indecision. Indecision means when the fight is going on. So when the fight is going on between the bears and the bulls, so neither of them wins. So you need to look this particular candlestick pattern, you know in context with the prior trend, and always remember that when a indecision happens, it's better to avoid the trade, because we don't know that in which way the market is going to move. Sometimes it can happen the market is in downtrend and suddenly this doji happens and then market moves up, so the trend changes. Or sometimes it can happen that market coming down, a doji happens or a spinning top happens, and then market again start falling down. So this is basically a resting period. Okay, so always be careful. Now, so some of the doji, it has, this is the dragonfly. So it means that the price came down, but suddenly some buyers came in, and price almost closed at the open price. And this is called the gravestone doji, and this is called the rickshaw puller. Okay, so now let's see on a real example. Okay, so here on February 2014, we can see that there are multiple spinning top or doji has formed here. Correct. So here we can see that this particular stock Reliance, at this period of time there is indecision going on. So neither we can say predict that it will go down or it will go up, but we know that suddenly this trend, whatever the prior trend that it has, it is either going to continue or it can change, it can reverse. So, but you see this almost a Marubozu, this candlestick after a doji changes the whole context. So it shows me the bullishness. Also this candle, right? So these two candles gives me the now the bulls are in control. So the price you see started moving up. So this is how we can read the candlestick charts and the candlestick patterns. Now moving to the another candlestick pattern, that is called the paper umbrella. Again, you see the paper umbrella looks like this. And one more thing I want to tell you, that doji or paper umbrella, their body, the colored body, the body color, doesn't matter. It can be green or it can be red, but it doesn't matter. What matters is its appearance. Okay, so here the spinning top, the spinning top means there is no upper shadow or very low, upper shadow, so negligible upper shadow. But what it represents is that the price started falling down, and suddenly the buyers come and keep the price moving up. Okay, so it's some, sometimes it represents a bullishness when it appears on a downtrend. So there is a downtrend and suddenly a spinning top appears. So this is called hammer. When in a downtrend a spinning top appears, this is called hammer. And when in an uptrend, okay, so if a spinning top appears, so this is called hanging man. So these are nothing but a trend reversal signals. Okay, so if a hammer appears after a downtrend, means that there is a maximum chance that now the price will go up, and if there is a hanging man appearing after a uptrend, so there is a chance then the price will go down. So always, as I am telling you, that always look for the prior trend. Don't look the candlestick pattern in an isolation. Okay, you have to look for the prior trend, the earlier trend. Now there is another aspect of this, is called the inverted hammer. So now you just invert this structure, this candlestick pattern, and then you will get an inverted hammer. Similarly, if you invert, if the inverted hammer, if it, so we call it inverted hammer if it appears after a downtrend, and we call it a shooting star if it appears on a uptrend. Okay, so now let's take an example. Okay, and one more thing that you need to measure, that is this the lower shadow is twice the body of the candle. Okay, so we'll do that. So on Reliance again, we see here, so this candle you see, so this looks like an hammer. So but we'll measure it. So what is the OHLC? So open is 408 and close is 405, so it's 3 points, right? But from the closing to the lower, it's almost 7 points. So this lower shadow is more than twice, more than double of the body, correct? So it's a hammer. We can call it a hammer. Why it's a hammer? Because it's appearing in the downtrend. You see here the price is moving down, but suddenly this hammer appears, right? So now, though it is red color body, so as I said, the body doesn't matter, the body color doesn't matter. So what happens, that the downtrend continues and the price started falling, but suddenly the buyers come in, okay, and it moves the price up. So now we can say that since the buyers are showing interest, so now we can say that there must be a chance that the price may move up, the price may reverse from here. So now as you can see, after this hammer's appearance, the price started moving up, right? So this is the hammer, because this paper umbrella is appearing after a downtrend. Okay, now another example of the same stock, Reliance, 15th Jan 2016. So you see, though there is little bit of upper, here, because this is an inverted one, right? So this is called a shooting star, right? So we can, this lower shadow here, it can be negligible, and this is appearing after an uptrend, right? And you see here, so what it means is the price started continuing the uptrend, following the uptrend, and price started moving up, but suddenly a selling pressure comes up, and then it makes the price down. And also you see there almost a doji appeared before this candle. So we can see that now the uncertainty as well as the selling pressure will lead to a market fall down. So that is what happens after the uptrend followed by a downtrend. So you can take some example, you can search for this particular pattern into a stock, and you can practice it on your own. So moving to the next one. Now so far we have gone through only one, that single candlestick pattern, that is based on a single candlestick. Now we'll look for the multiple candlestick pattern. So here this is the engulfing pattern. What is an engulfing pattern? Is there will be a candle on a T1 day, that is means let's say any day is T1 day, and the day after that is the T2 day. Okay, so this is the first trading day and this is the second trading day. So as you can see, engulfing means it engulfs the whole candle. So what happens after a downtrend, suddenly the price started falling down, but suddenly the buyers comes in and makes sure that the closing price of the second day candle is higher than the first day's opening price. Okay, so this is the opening price because this is a red candle, right? And this is the closing price because this is the green candle. So the buyers comes in and then it ensures that the price closes above the opening price of the previous day candle. So which means the body of this candle actually coincides within the body of this candle. So this is called the engulfing. So this is called the engulfing pattern. So now if it is appearing after a downtrend, so this is called a bullish engulfing. And if similarly, if it appears after a uptrend, so it is called a bearish engulfing, means that we can predict that after this candlestick pattern there may be a price trend reversal. Let's take an example. Okay, here is one bullish engulfing. You see the price, actually it's a prior trend is downtrend, right? You can see the price is falling down, and then suddenly the on this T2 candle also the price started continuing the trend that it's falling down, but suddenly the buyers comes in and push the price higher than the opening of this previous day's candle. So this gives me a bullish signal that now the buyers are into control, so they want the price to move up, and that is what happened. You see here that how come after this candlestick pattern the price, the trend changes and the price moves up. Again, very recently on 20th Jan 2020, you see here, so this is another a Marubozu, but also an engulfing, bearish engulfing. You see the price was moving up, so it's a prior trend is uptrend, but suddenly this particular candlestick pattern happens. So this is a Marubozu with an engulfing pattern, correct? So it's very dangerous. So it's both the candlestick are there, right? So it's a both. The context of this candlestick is very important, influence is very important, because it's not only a Marubozu but also an engulfing, bearish engulfing. So we can predict that from this candle onwards the price will move down. Okay, and that is what has happened. You see where the price falls from here to here. Moving to the next multiple candlestick pattern, it's harami. So it's not a slang. Harami in India it's normally a slang language, but actually it's a Japanese language. It's called pregnant. So the significance is that, you know so this is a bullish harami. It looks like this. So pregnant means, you see on the T2 days candle is actually confined within the belly, means the body of the first day's candle. So the prior trend is downtrend. So the similarly, this is a red body, and then suddenly what happens, that on the T2 day, okay, the second day candle, the price opens. So this is the open, right? So this opens higher than the closing price of the T1 candle. So this shows that now the buyers are jumping in. Otherwise, the how come the price can open from the close of the previous day's candle. So this is called the gap up opening, right? So there is a gap up opening on the price, but the price did not go much up. It confined within the body of this candle. So this is called the bullish harami. As you can see, this candle looks like a pregnant woman's belly, right? Similarly, the bearish candle appears before a bullish trend, uptrend, and then suddenly, the price falls down. So the price opens lower than the closing price of the previous day's candle. So this means that now the sellers are in control, and there is a gap down opening, and the price of this particular candle, the T2 candle, confined within the body of the T1 candle. So this has to be red candle for the bullish, and this candle's color doesn't matter much, but if it is a bullish harami, then green color is green color is appreciated. And similarly here the T1's candle must be a green candle. T2's color doesn't matter much, but a red candle is more significance, has more significance. So now let's take a look into the example. Okay, so I found one example of Reliance. So you see here the price is coming down. So after a big red candle, so there is a bullish harami appeared, right? So again, you see here this particular candle. So we can see that this downtrend may stop now, and then the start of a new trend can happen. So as you can see here, so after that, after few days, there is a good uptrend that has happened, you see, from here to here. So this is another example of the bullish harami. Okay, again here, after a downtrend, okay, so you can see this candle, it's a very small body candle, but there was a little gap up, you see here. So this is again a bullish harami. So this is how you can practice. And this is, you see, this is the bearish harami, you see here, right? So again, so this appears after a uptrend, correct? And so this is a bearish harami. As you can see that this candle tells me that now the price may start falling. So that is what exactly has happened. So this is how the we can look for the candlestick pattern and determine the price movement. So moving to the next candlestick pattern, it's called a star pattern. So it's a pattern consists of three candlesticks. So T1 candle, T2 candle, and the T3 candle, means the trading day 1, trading day 2, trading day 3. So what happens is this pattern is called a morning star, and this pattern is called a evening star. So after a downtrend, the price again continues to move down. There is a red candle, and there is a doji or spinning top formed, but the doji is actually gap down from the previous day candle. So this is very much important. Okay, so there must be a gap down opening of a doji or a spinning top, but on the T3 day there is a gap up opening. So this doji itself means a indecision. So it honors the downtrend, correct? So that's why there is a gap down opening. But suddenly on the T3 day there is a bullish, and also the T3 days closing should be the upper of the opening of the T1's candle. So remember, this value must be, the T3's closing must be greater than the T1's opening. Okay, so this is also important. So these are the two things that you need to see: the prior trend, then the gap down of doji, and then the gap up, and on the T3 day, and the gap up, this also will be closing the price of this candle's opening price. Similarly, the evening star is a bearish pattern. So it happens, it appears after the uptrend, and then there is a the following a uptrend, there is a good bullish candle, and then suddenly a doji appears after a gap up opening, so which honors the trend but tells me an indecision between the buyers and the sellers. And suddenly there, after that, on the T3 day there is a gap down, and the price also comes down the opening price of the T1 days candle. So it shows me that now maybe the viewers are in control. So let's take an example of this pattern. Now you see here, so there was a downtrend, right? And then suddenly a doji appears, a gap down opening, and also a gap up opening followed by a gap up opening on the T3 day, and almost the prices, this closing price and this opening price of T1s, they are same, right? So we can say that this is a morning star, and it could be a reversal of a trend, and suddenly this had happened that the price keeps moving up. So the downtrend has been reversed to an uptrend. And again we can see that there is a bearish pattern. This is called the evening star. So you can see the prior trend is uptrend, and here there is a doji formed. So there is a gap up doji, okay, gap up opening, and then a gap down, and this candle closes below the opening price of the first day's candle. So this is again a evening star. Okay, so and after this formation, you see the price falls down. So this is the prior early signal that we can get to so these are the candlestick pattern. That's it from my side today. So there are many candlestick pattern available. If you just go to Wikipedia and look for the candlestick pattern, so you can see here there are many candlestick pattern. You can go through it, but Always remember, just realize the underlying psychology, the underlying bear and bull fight going on. So it will tell you a story. It's just looking into a candlestick pattern or maybe the prior trend, you will see a story behind every candlestick pattern. So try to understand that, and I hope that it will help you in learning of the technical analysis. Thank you very much. If you like this video, please press the like button, share it with your friend and subscribe to our channel. Thank you.